Hey Dave, how you doing today?
I'm doing great, Nick. How are you?
Doing well. Beautiful Friday, sun is shining, winter chill is upon us, although it's pretty warm today, actually.
Yeah,
Um,
it's warm today. You must be, you're 20 miles west of me. It's not sunny here. So
Maybe
enjoy
it's
it while
coming.
it lasts. Yeah.
Maybe it's coming.
Yeah.
So we have a great episode today. Great and bad all at the same time, I suppose,
Well,
right? But an important topic and one that comes up quite often from the standpoint of dealing with market volatility. But the new thing around this time that everybody's talking about that's got the markets jittery is the impending AI bubble being burst and what that means for portfolios and retirements, and is the world ending?
yeah.
Are the robots really not taking over? What say you, Mr. Shotwell?
Yeah, so here we are. It's been a great year. It still is
Yeah.
a great year.
Yeah.
Market, like the broad market over the last couple of weeks is down like 3 or 4%. This isn't
Right.
even technically a correction. It's a
Mm-hmm.
breather. It's a little more volatility than what we've seen.
Yeah.
It's like nothing that doesn't happen multiple times a year, really,
Right.
in the
Yeah.
market, right? And but it's got everybody like perked up a little bit
Oh, for sure.
more than usual, because things have been like up until now for the last, several months, call it, I think we're going on 2 years or so of the
Mm-hmm.
AI, like AI stocks could basically do no wrong.
Right.
And, so now all of a sudden here, this late fall, we're starting to see even good news. Like, Nvidia yesterday had a great earnings report.
Yeah.
The market actually spiked up great at the open that would have like undone the last couple of weeks of negative returns in that sector. And by noon, everybody was like, "Nah, we don't really trust it. We don't really believe it." So it's kind of a change in mood almost, right?
Yeah, for
Like
sure.
a gestalt shift. Everything before was great no matter what, and now everything's like suspect no matter what.
Yeah.
And
Mm-hmm.
and that's an interesting change of mood in the market, if nothing else.
Yeah, I mean, AI was the great savior for a lot of the year, and now we're like questioning that, right?
Right, right, right. Do you know what's going to happen? I don't know what's going to happen.
No
Right,
freaking clue.
right, right. Yeah, so
Um,
from our point of view, this isn't the kind of change that leads to asset allocation changes. It leads us to do anything different than what we normally do. But we know that investor psychology is an important part of this, right?
yeah,
Our main role that we enjoy doing is financial planning and putting the pieces together and figuring out the puzzle. But one of the most important parts of that is being able to help clients get through the bad times in the market without doing damage to their plans, right?
yeah,
I mean,
right, for sure.
we can build the greatest plan in the world, but if the client gets out of the market at the wrong time during a routine downturn or during a full blown bear market, it can undo all of the potential good.
Yeah,
So
like many things in life, we are our own worst enemy.
right,
In finances and financial planning,
yeah.
that can also be very true.
So the goal of today is just to provide some reminders for clients about how dealing with these kind of turbulent times and uncertainty is just the price of admission for
Yeah.
being an investor in this world.
Well, if investing was easy and the markets just went up, everybody would do it, right?
Right. Everybody do it, and all the returns would be about the same as a
Yeah.
treasury bill. So,
Right.
or a savings account.
Yeah.
So, if there's no risk, if there's no risk, there's no reward or lower
Right.
potential reward, right?
Right.
And so that's actually where we were going to start here, and where we like to start with clients is remind people of the base, like just a couple basic points about investing, right?
Right.
That you need to
Mm-hmm.
keep in mind good times and bad. And one
Yeah.
of those is risk and reward are related. If you're not taking any risk, your return is going to be about the same as inflation if you're lucky.
Right.
And so there's really no way to separate that. We also like to remind people that if you do not believe that the long-term economic outlook is positive, you really have no business being an investor.
Right.
Okay. We talk to those people that are always pessimistic. It's like, what are you even doing here? Why, what didn't then put everything in a savings bond and, call it good? Because if you don't believe that economic innovation or technological innovation, economic growth, all the things that have driven the economy for the history of
Yeah.
mankind, if we're not improving, then you really should not be investing, not in
Right.
equities anyway.
Well, I think that's so true and such a good point right now because we have this AI thing, and
Mm-hmm.
everybody that I talk to, listen to, really believes that AI will be a game-changing technology, similar
Mm-hmm.
to like the internet. But what we also went through with the internet bubble in 2000, which
Yeah.
is this gets compared to a lot, is this thought of like, oh, well, it's changing the
Yeah.
world, and it's going to happen. It's going to happen now, right? Like
Yeah.
AI is
Yeah.
changing the world. It's going to
And
happen
there's growing
tomorrow.
pains. Yeah.
And the reality is, it's probably not going to happen tomorrow. Or we have there's no way that we can reasonably predict what the impact is going to be in the next week, year, couple
Yeah.
years. But like long term, if you're patient and diversified, it shouldn't matter because
Yeah.
as that changes the world, you're going to participate in it. And that's that
Right.
optimism of like, yes, this thing will be good long term for capital markets, but
Yeah.
it's probably not going to be a straight up road. There's going to be
No.
some bumps along the way.
No. And picking the winners and losers on an individual stock basis would
Yeah,
be insane right now. But
right.
yeah, you can compare it to the internet bubble. You can compare it to the railroad bubble. You can compare it to, pick your point along the inflections of the Industrial Revolution. The old joke about the buggy whip makers in 1910.
Right.
You don't want to be on the wrong side of investing in a technological inflection point like that. It does not necessarily mean the doom and gloom that a lot of people assume that everybody's going to be out of work. No, your work will look different. Yeah, I mean, we could go on, but if you don't believe that the long run is positive, you shouldn't be here.
Yeah,
You
for
know,
sure.
and on the flip side of that, the short term is always uncertain and always scary.
Yeah, indeed. Thank you for joining us for another chat about your retirement and finances. Please hit that subscribe button. You can also contact us at srbadvisors.com or email us at info@srbadvisors.com. See you next time on Kitchen Table Finance.
This is a Zedia Media production.